Hello, everybody. Welcome to my new weekly review. So, today I will go over the two losses I took last week. So, I had around minus 1.3% loss with these two trades together because I risk 1.5% each trade. So, they went a little bit lower in loss because of spreads and late took out of a trade. So, I will go over exhaust euro and EURJPY. Both trades were trades followed by the plan. So I will go over daily, weekly, and 4 hour first. So if I go over the daily, what could you see on silver euro? We had our first leg, second leg, third leg, fourth leg. You could see clear impulse, correction, impulse, more corrective nature, which we received there on in that fourth leg. And what we could also see is the shoulder one here, this head, and shoulder two potentially here, which we didn't respect it because we went lower to grab the liquidity from this daily low zone from that bullish M. So this was for me a clean setup. We had also here a daily bullish candle close after liquidity got taken from this daily zone. So that was nice to see. And this is a clear supply and demand zone acting as support, 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 resistance, support, resistance, resistance, support, support, resistance, false break here of that zone, and then support. So for me, this was a clean trade to take on the daily. So now I will go over the weekly chart. And on the weekly, what could you see? We had a 3 out of 4. The trend was with us. This was your last low. This was your new high. This is clearly bullish. This is a clear correction. And you can see also here same highs. We expect the same lows, which we did here. And then we received that first leg, second leg, third leg, fourth leg, impulse correction, impulse correction. And then we rejected from this liquidity zone here. And now that fifth leg can potentially play out. So the trend is for us. The candle close, this one was against us. So this is a really bearish candle. The fib from this low till this high is for you. Supply and demand zone here aligning. Or here you can also see this as your supply and demand zone here. So for me, the supply and demand zone was for us. So actually we had a 3 out of 4 to go for that long. And then on the 4 hour, what did we receive? We received a break of structure. We had here a high, new low, then we broke above this previous lower high, we made a new high. So, and we impulsively closed above it. So we had a break of structure. So what we received then, shoulder one here, head, potential shoulder two with resistance in the head. So, and I just took the limit and it went to the downside to grab here that liquidity. You can see here, this was a descending channel here and we broke out of it. So yeah, it was a trade followed by the plan. Then the next one was EURJPY. This was also a good trade. So I will go over the daily, weekly, and 4 hour. This was a loss for me. So if I go over the daily, what did you saw on the daily for going potentially long? We had here a bullish M, first leg, second leg, third leg, fourth leg. We had the bullish M, impulse correction, impulse potential correction. So this was a clear bullish M, small bullish M for me. So yeah, we could take the trade. If I go over the weekly now, the weekly was touching this weekly high potential selling zone with the weekly fib completion from this fib from this low till this high with the fib completion here, or you can take the fib from this low till this high, it doesn't matter that much. But yeah, we had 2 out of 4 for us. The trend was for us because we had here still our low and high. This was just potential false break or first time break, which means that the trend is still bullish. We can go back and go to the upside to make a new high. And that candle close, this one was also for us really closing bullish. So for me, it was still valid to take this kind of trade because the daily was still clearly to take. So then on the 4 hour, on that 4 hour, we are waiting for that inverted and shoulders because yet here also on the 4 hour, your first leg, second leg corrective, impulse correction, third leg impulse, fourth leg corrective nature. So some people would place their limit here on this shoulder one here, this liquidity zone, then you could potentially go break even. But I was waiting for a break of structure or same highs, which we did here. We had a small break, not a real break of structure because it isn't close above this 4 hour lower high wick. So for me, it was a potential shoulder one here, head, shoulder two without break of structure, stop loss below this low. And yeah, this trade was taking us out because of news back then, so no problem at all. It was a trade followed by a plan. I would take it every time. So these were the two trades that gave me this two losses that week. And if I look to the missed trades, I had a lot of missed trades actually. And that is also because of conversations about a losing week, because last week I had also that losing week. And yeah, this was making some conversations about that. So I will go over the positions. So the first one, gold USD, so exhaust USD. This trade I normally wouldn't take because I don't trade commodities normally. But if I was reviewing it on a daily and I saw there was a potential retrace trade you could take um, back then of last week, I guess, previous week. And then we received here that first leg, second leg corrective, third leg impulsive, fourth leg only corrective, then the fifth leg playing out to the daily TP. So we had a bullish M, even that the daily is bearish. Daily is bearish. We are making here this bearish W, and then we made here this bullish M after it. The thing that I was or that I saw that was likely a good thing to see is that we had here the support, resistance, support, resistance, potential support here again. I see sitting here to take liquidity to go to the upside. This was the trade that could play out. And it did play out because we had here also this nice daily supply and demand zone with the clear impulses, corrections, impulses, corrections. So then I will go to the weekly, and the weekly was telling me here that we had a 4 out of 4. We had our trend, we had our low, new high, we were bullish, we were making this bullish M, impulse correction, and we received that candle close, this one for us at this supply and demand zone here, this nice zone where we grab the liquidity and we can go to the upside from there. So candle close, trend, the fib from this low till this high is in play, and the supply and demand zone. So 4 out of 4, which is a high possibility probability setup. And on the 4 hour, what could we see on the 4 hour? We had a fib completion, a third leg fib completion, so first leg, second leg, and this is all your third leg then. And the fib from this high till this low, and we had the minus 68 fib completion aligning here. We normally wouldn't be in this trade because the spreads are too high to take us on this trade. So we would be in this trade here, which is aligning with this 4 hour bullish M. First leg, second leg correction, third leg impulse, fourth leg correction, and then within that you had here also that shoulder one here. You had shoulder two here aligning. It just didn't tap it if you took a horizontal line, but it was a pattern within a pattern. So this was a trade actually, and this was directly going to the daily TP. Then the second one, AUD USD. So if I go over the daily, weekly, 4 hour, this was a could be a break-even trade. So what I was seeing on this trade was I was too focused on this daily shoulder one zone, this major one, the lower one, where we grabbed liquidity here, here with the wick, here with the wick. We had that impulses to the upside. So I was focused on that lower shoulder one, which is the cleanest followed by the plan. But what I saw was we had a retrace actually. If you take your fib from this high here to this low, you had a minus 60, fib completion aligning with a daily full candle close to the downside, a bearish candle with a daily supply and demand zone holding the price potentially up as false break here, buyers as potentially false break, and then here buyers were kicking in. So as a retrace, we could potentially take it if we had a clear daily supply and demand zone, which we had. So then if I go to the weekly, you could see on the weekly, this was a clear potential trade to play out. So for me, it was a 3 out of 4. For me, the trend was still bullish. You had here your low, high, low, new high. You had here your bullish M. But we made the first time break, which isn't a confirmation yet. Only if we make here that bearish W here, then we can go more to the downside. But for me, it was just the first time break, so this is clearly still bullish. And then I saw, okay, we grabbed here or touched this previous structure low, which acted as resistance here, but then we grabbed new liquidity from this buying zone here, support, resistance, support. So then the supply and demand zone was still working for us. So the trend was for us. Candle close. This one was closing bullish. And then the fib from this low till this high, we cannot count it with us, or this fib from this high till this low, it's just not touching anything. So it just nothing. And then the supply and demand on this one here is working for you. So 3 out of 4 to go for that long. And then on a 4 hour, what could we see? We can see we have here the deceleration we could take. So first candle, second candle, third candle, you could take your limit here, a little few pips or 1.5 to the upside, and then you could take this trade and it was running and you could go on break even because the price came back to the break even point. So this was the trade. So why I didn't took it, because I didn't saw the retrace in it, and daily zone, I was too focused on that daily major inverted and shoulders. That's the reason why I didn't take it and saw it. So then the third one, SDCHF, this could be a loss. This one, I took it on demo because I didn't want to expose myself to many patterns, to have not that many noise in my trading. But I will go over it and explain it further in depth why it was uh, the reason I didn't took it. So on the daily, what did you saw? On that daily, we had a potential pullback trade or first time trade. What I mean with that is the trend is bullish. With here, first leg, second leg, third leg, fourth leg, fifth leg, we were making low, high, low, high, higher highs, higher lows. And then we had that first time break of this previous higher low. I see a week. We had that break. So this is a first time break. And with the first time break, we want to see that when we break it, we grab liquidity to go potentially make that shoulder one, head, shoulder two, or potentially touch this previous structure I see. So we grabbed here the liquidity, went to the downside. We grabbed the liquidity from this resistance zone, support, support. So the buyers are sitting here with a weekly horizontal line holding the price potentially up. So the weekly liquidity is also sitting there. So we had that first time break and we had that candle close. So we were looking on the 4 hour for that potential pattern. So I will go first over the weekly because the weekly with a potential 2 out of 4. The momentum, I'm also counting that. So we have the trend and the momentum. And the momentum here is bullish. The momentum is impulse, potential correction, impulse, potential correction, impulse. So the momentum was for it, but I don't count it with the criteria. But this is just as a visual for me. So to see, okay, the momentum is for us, trend is against us because you had still your high and this is your low. This was just the first time break, so this is actually still clearly bearish. So then the candle close, this one was bullish closing, so this was for us. The fib from this low till this high was a potential fib completion against you, or you can say this high fib till this low can play for you. Yeah, some people will see it like that because this is a major impulse from this high till this low, and this can be your correction also. But yeah, for me, it was a fib from this low till this high against you here. Then the supply and demand on this one was clearly at this IC as resistance, resistance, nice wick to the downside, nice wick to the downside. Then we were acting above it and it held it as support. And here again, resistance, here support, and then potentially support, which we did on that week. We closed. So a 2 out of 4 for me. And then on the 4 hour, you could see we were looking on that first time break, a deceleration, first candle, second candle, third candle, one candle in between, and we could take a trade here on the potential fourth candle. And then the stop loss 10 pips below the lowest wick. And we were just taken out by this trade in my demo just by the pip because of the spreads. And yeah, this can happen. But yeah, I didn't want to expose too much on my trading patterns because I also trade a lot of patterns right now. So these first time breaks, I didn't want to take them in count that much for now because I had a losing streak. So that's why I didn't took it on my reel and I took it on my demo. So I will delete the screenshots. I will go over the fourth one, here the USD. This is actually the scale-in trade. So I went over it. AUD/USD, this deceleration, retrace, minus 27 or minus 68. It was tapped here with a full daily candle. Deceleration you could take here. And then after that, we had that first leg, second leg, third leg, fourth leg, and we could grab the liquidity from this daily potential selling zone, which we did after touching here from that bullish M, the 4 hour minus 27, which was aligning here. So this trade you could perfectly take because it was so nice aligning with that daily selling zone and the 4 hour minus 27 aligning here. So if I go over the daily, you could see it more clearer that this trade was at that selling zone here. This was clear sellers, sellers here, support, support, potential sellers here. Again, you can see it's clear supply and demand, so support, 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 support. So that's why also the reason is that this trade was holding the price there down and came back to the downside. As you can see, we touched it, we went to the downside. Potentially we touch it here again, we go to the downside. As you can see, impulse, potential correction here, going to the downside. So yeah, this was a trade there, the scale in trade, potentially, that I didn't take. Then the next one was USD/JPY. So I will go over the daily, weekly, and 4 hour. This could be a 2.5% trade. So yeah, I will go over the daily. So why I didn't took it was because I didn't feel comfortable yet about this fifth leg minus 27 fib completion. Just in the major thing, fib completions, I need to really backtest them because I have a lot of backtesting files that I need to finish step by step, and this one I didn't finish yet. So what could you see on a daily? Impulse first leg, correction IC, impulse third leg, correction fourth leg. A, B, C correction, we grab the liquidity from this IC. So you can see it as a wave impulse. Wave 1, 2, 3, fib completion, aligning with this IC where the liquidity is at. We went to the upside and we closed at this daily high selling zone here. So really nice trade actually. So then on the weekly, on that weekly chart, you could see we had a 3 out of 4 for us. So what can you see? The trend was still for us. So we had here our high and new low. This is a potential change in trend, but this is an indication, so we could go back to the upside and break again because this is just a first time break. This is not a confirmation that the trend is switched. So the trend was for us, candle close, this candle close, one blue one was for us previous week, and the fib from this high till this low was against you. It was just against us. And then the supply and demand zone here acting as resistance, support, buyers. Here that's nice support when this week came all the way back up. Then here support again. So for me it was a clear buying zone there that the price could go potentially back up. So a 3 out of 4. And then on that 4 hour, what could you see? You had a fib completion, a fifth leg from this high here. You take your fib from this high to this low. The minus 27 was aligning here really nicely at this shoulder one, head, then here shoulder two, and then you had here your bullish M. You had here on the 4 hour a major pattern within a pattern with that big correction. Was actually a clean trade. If you look on the 4 hour with the clear impulses, corrections, fifth leg, fib completion, then this candle went all the way to the upside closing. So it was a really nice trade to take as you look. So because I'm feeling not that comfortable yet to take this kind of trades that I don't take them yet, but actually I could take this. It was a really clean setup. USD GPY. So I could take here 2.5% out. Then the next one, NZD GPY, was a fake out on the daily. I will open it daily, weekly, and 4 hours. So I will give you the reason why I didn't take it. So this trade is still running if you took it. So a fake out is just a daily candle close under this previous higher low. You had a small close below it. So this is a potential fake out, which we call it. And why I didn't took it was I was looking at this third leg and I saw that this fourth leg came back more impulsive with bigger candles. So this was scaring me out. This was thinking, yeah, I'm focused on impulses and corrections. So this impulse, so this needed to be normally a correction, which is now an impulse which with bigger candles. So this was scaring me out. But when I reviewed it and I asked my mentor Bjorn, I said, yeah, why must we take it? He said, yeah, there is a good reason or a high possibility that this trade have some buyers because this is just a first time break. So it's a break and retest that the retail traders and the retail traders buy or sell. So then there is enough liquidity for the institutes to go long and to go potentially test this support that can become resistance. So this is the psychology behind it. And also we had a weekly daily buying zone here and that weekly liquidity zone that could grab liquidity, go to the upside. So this is the reason with fake outs that we can go to the upside even if you have an impulsive leg to the downside, which can play against you. So then on the weekly, what could you see? All the GPY pairs are going to the upside. You can see it's a major uptrend and it's following it for a long time. So we expected there some push to the upside. So we had here a clear resistance here at support week, which is nice, which it became then a supply and demand zone for me. And then you can see we are holding it a little bit up with this ascending trend line, trend to the upside. You had here your big bullish M here, still in play, and also this smaller bullish M fib from this low till this high. This is your smaller bullish M here. So for me, it's a 4 out of 4. Trend was for you. Candle close. This one was really closing nicely to the upside. And then the fib from this low till this high, I was taking also for you. And the supply and demand zone, this one here was working for you then. So 4 out of 4, a high probability setup. And on the 4 hour, what could you see? A clean deceleration you could take. I was analyzing this, but this daily was convincing me to not take this trade, which is really unfortunate that I didn't took it. But yeah, after reviewing it and the feedback I got, I will adjust it when I have these fake outs and when I see we have a clean buying zone, supply and demand zone. Okay, there is some liquidity that can potentially get taken. So this was a trade. Then the next one is GBP CAD on the daily. This is actually a trade you can discuss or that it's not valid or yeah, it's more risky to take. But what I saw here was we had here a fib from this low till this high, minus 60, 80 fib completion, full candle close, and we grabbed the liquidity from this daily, weekly selling zone, daily supply and demand zone. So it was a clear selling zone on the daily. So this was a potential daily retrace. And if I go over the weekly, You could see the weekly had here an impulse to the downside. We closed below this previous higher low. You can also see this as a major bearish W here. Impulse, potential correction here. Back going to the downside. And you can see also here impulse A, B, C waveform. We grab the liquidity from these weekly highs, which is here a nice selling zone, false break, weak sellers, sellers, nice tap, sellers, sellers. We went to the downside, downside, potential going back to the downside. So the momentum is there with us. The momentum here, the price is giving us impulse, waveform A, B, C, fib completion, liquidity zone, big sellers are sitting here, and we can go to the downside. Even if the trend is still bullish. Trend is still bullish because we had a first time break of this previous higher low. It's just first time break and we went back up. So what was for us was this fib from this high here till this low. I was taking it like this, or you can take it also from this high till this low. No problem at all. And then the supply and demand zone here, this major selling zone here is working for you. So 2 out of 4 to go for that short. And then on that 4 hour, you could see here the shoulder one had shoulder two. Why I didn't took it? Because I was analyzing this trade and I saw we had here also a wick. So this wick came till this highest wick. And you can see we had also here a big wick. And I saw sometimes if I have this high wick of the shoulder one and you go to right, you can see also here a wick that is just closing a little bit above it, but not above it, below. But we have also then a wick that it sometimes come back a little bit more and then it will go to the downside. So I was just having here that conversation. Okay, I want to place my stop loss here at this uh, shoulder one weeks above this highest week here. And yeah, then the risk reward wasn't good anymore till this daily previous structure where we can take some huge profit out. And yeah, that's why I didn't took it. But actually, you can see it's fine to just put your stop loss above this shoulder one week here. And then you have something here, your stop loss, and then you could take your entry here. You have also here this impulse A, B, C waveform to go to the downside. Price is already tired here and is making or preparing itself to go to the downside. So this was the GBP get trade. Then I have a lot of missed trades actually. Then the pattern went in a pattern small one, EURJPY on a daily, weekly, and 4 hour like this. So what can you see? We have here after taking the loss, we had here a long to go to the upside, we could take that short. But the conversation was too big to take immediately. Okay, we go short now. Then I will go maybe -4.5% or -5 that week. So the conversations were playing in my head. Okay, now I don't want to lose, but this is wrong. So yet here your shoulder one had potential shoulder two within that first leg, second leg, third leg, fourth leg. Pattern within a pattern for me, it's a small um, pattern. And we can see we had here impulse, correction, impulse, impulse, correction, impulse. So the momentum was changing for the bears. The bears were in power right now, so we could take that short with that head as support. Here the resistance. So you had here supply and demand zone aligning there. So this could um, hold the price to the downside. Then on the weekly, you could see, yeah, there was a 2 out of 4 to go short and 2 out of 4 to go long. And this 2 out of 4 to go short was this weekly high selling zone and the fib completion here grabbing from this low till this high. Fib completion was tapped and then we could go to the downside, potentially to retest this previous structure as resistance, which can become support here. So 2 out of 4 fib supply and demand zone. This was a good trade to take. And then on a 4 hour, you could just take your limit at the shoulder one. You could see this was the buy shoulder one, head shoulder two to go to the upside. We didn't do that. We went to the downside. So we could change our mindset. And this can be the shoulder one, head, shoulder two, and then here the bearish W in play. Limit could be set, stop loss above this shoulder one wicks. And then you could be in it and you could already go on break even out because you had here that push to the downside here, and then it went back up. So this was a trade that could be on break even, and potentially you can make then the shoulder one, head, shoulder two within that small bullish M here to go back to the downside that week for next week. So I will close it, and then as the cat, this one is still running daily, weekly, 4 hour. If you would take it, it would be a trade that is still running. So on the daily, what could you see? You can see this is a daily big bullish M. You had your first leg, second leg, third leg, fourth leg. It's coming back in A, B, C form. So it's an IC also within it. So for me, it's a big bullish M because it took a lot of days to make this one. And you can see here this daily zone is acting as support, 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 resistance here, resistance, resistance. So it's a major daily zone here that I drew, aligning with the fib between the 61.80 and 78.60, aligning also with this ascending trend line holding the price potentially up. Then on that weekly, what did you saw or what I saw was a 4 out of 4. The trend is still bullish. Yet here your first leg, second leg, third leg, fourth leg, potential fifth leg to tap the weekly minus 27 around here. And what can you see also? We had here also a small bullish M first leg, second leg, third leg, fourth leg, impulse correction, impulse correction. And here the liquidity zone on this weekly higher low low you can see acting as support buyers, resistance, 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 nice weak, went to the downside, resistance, potential support which we didn't tap here, but it was a buying zone there. So clear zone. So 4 out of 4. The trend was for you. Candle closed this one, really bullish closing. The momentum was with us. Fib from this low till this high, or this low till this high is for you. And the supply and demand zone, this one was working for us. So a 4 out of 4. Then on the 4 hour, what could you see? This one was a conversation I had about the correctivity of the 4 hour. I think a lot of traders wouldn't take this because the trend is still bearish. Yet here high, new low, high, potential new low. These are the same lows. But what I saw was we grabbed that new action from this daily, and then we had first leg, second leg, third leg, fourth leg. We could take this trade here. It's not a 4 hour bullish M with break, but I saw it plays out a lot of times. And you can see it grabbed that 4 hour minus 27 here TP, so you could go on break even. So yeah, then the last one, or I think two other ones. Yeah, there needs to still be talking about two trades, Euro AUD. So on the daily, weekly, and 4 hour. Yeah, there are many trades actually. Last week, really a lot. So on the daily, what did you saw? Bullish M. Normally, this is a bigger bullish M first leg, second leg. This is all your third leg, fourth leg. But then I saw also, okay, if you look at the clear impulses and corrections, we didn't also complete this fib from this low to this high where the daily TP is here. So we didn't tap it, so we can look for the smaller bullish M's within it. So we have here our first leg, impulse, second leg, correction, third leg, impulse, fourth leg, correction. Then we are coming back and acting as support here, which was reacting here as resistance all the time. So this was a clear zone aligning with this IC where the liquidity is sitting from. And on the 4 hour, no, I will go over the weekly now, sorry. So on the weekly, you can see we have a 3 out of 4. The trend for me is still bullish. Yet here your major low, this is your major high, impulse, correction. potential impulse here, correction, impulse again, correction, impulse. You can see the momentum is bullish, yet here the impulse, potential shoulder one here, head shoulder two. We grabbed liquidity from this previous IC here. We went to the upside, impulse, correction, impulse. So the momentum is for us. So the trend here is for us. Candle close. This one was not really actually acting against you or for you. So for me, this could be also just a um, yeah, black line or something. And then the fib from this low here till this high can be working for you to grab here at weekly minus 27 fib completion, aligning with these weekly highs. And then the supply and demand zone here acting as support. Here were all support wicks, resistance, nice wick, resistance, support, false break acting as support. This whole zone, support, resistance, resistance, false break. So this was a clear supply and demand zone that could hold the price up, which it did there. Then on the 4 hour, what could we see on the 4 hour? Because I wasn't feeling comfortable to take this kind of trades yet. This is just a fib completion and also a daily small bullish M where the 4 hour pattern is a pattern within a pattern. Yet here your first leg, second leg, third leg, fourth leg, which is your daily bullish M, but within that yet your shoulder one here, head, shoulder two, within that small 4 hour first leg, second leg, third leg, fourth leg correction. So you had clear patterns and clear impulses and corrections. And if you took your um, fib from this high here till this low, or this fib from this high till this low, yet here you're 61.80 touching this zone, and then the minus 27 would be aligning here, something like that, uh, to grab that liquidity. But you could also take this trade just because it's a small pattern. The shoulder one here sitting here, resistance acting from that head here, then this bullish M aligning. So you could just take your limit here on this zone and then you could go to the upside. So this trade is still running if you were taking this trade. Then the last one, GBP AUD on the daily, then weekly, and then the 4 hour. So on the daily, on GBP AUD, this was the smaller bullish M also that could play out as the same as Euro AUD because it's the same currency. So what did you saw here? Yet here your low. This can be seen as your new high because this can be also one leg or one impulse because it's a false break of these highs. So some people would see it like that. I would see it like this because we touched this as support and we went back to the upside, acting really nicely and making smaller bullish M's with clear impulses and corrections. So as you can see, impulse, correction, potential impulse, again aligning here with this daily supply and demand zone at this daily IC low. So you can see acting as here clear as resistance, then here support, 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 resistance. So this can hold the price up. And then on that weekly, what could you see? On that weekly, a potential 3 out of 4 to go long. We had that candle close here, grabbing or closing above the supply and demand zone, acting as resistance, support here. So I'm closing above it, so acting as support. So the clear supply and demand zone is working for you. The trend is still also for us. We had here our previous higher low, week, higher high. We had a new low, but this is just an indication of new low, and then we went back up, closing above these weekly highs, and then it acted as a supply and demand zone support here, this previous resistance that could become support here. So the price is now pushing to the upside to go back to the upside. So then the trend was for you, candle close. This one is for you, fib from this low to this high is not touching any fib levels. And then the supply and demand zone, this one here is working for you. So a 3 out of 4 to go for that long. Then on the 4 hour, you can see impulse, correction. Very nice. And we have a fifth leg, fib completion, minus 27 from this high till this low here. We grabbed the fib level liquidity here and we touched the minus 27, aligning with this daily supply and demand zone. We could take this trade and we were running, still running like this. So if I look now back to the spreadsheet, you can see we could take 4% this week of missed trades with five trades that could still be running. So this is major feedback, even six, this one, AUD/USD. This would be a break even. No, this would be a break even AUD/USD. So this is a 0%. So this would be around five trades that could be still running. And I think how many trades I could take, even if I didn't take gold, as I don't trade commodities, it would be around 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trades I didn't took because of conversations and losing week. So this is the importance of how you deal with a losing week, that you just need to place it and place it to the outside and say, okay, yeah, I just want to trade to win and not trade to lose. Because now I lost percentages and now I'm in a losing week because of I didn't want to trade that many pairs and had some conversations about these ones because of the losing week. So just trade everything you see because yeah, you have the technical things to just take the trades. Just take them. So yeah, I hope you liked the weekly review. So and yeah, see you next week. Bye.